Hello there, Maverick Traders. This is Imre, and welcome to this video on trading the head and shoulders pattern. The head and shoulders pattern is one of the most iconic market reversal patterns out there. You will frequently find them at major market tops, and you'll also find its close cousin, the inverted head and shoulders, at major market bottoms. What I love about trading the head and shoulders pattern is that it helps us avoid picking exact market tops and bottoms, and we're waiting for the market to commit to us before we commit to the market. So what we're going to do right now is I'm just going to break down this chart pattern in idealized line diagram form, and then we're going to take a look at how to trade it. And then, of course, we're going to also see what real market head and shoulders examples look like as well. Okay, so here's our idealized line diagram version of the head and shoulders pattern. So in an uptrend, what we're going to see is a significant rally to new highs. We're going to get a pullback. We're going to get another rally to new highs. And those moves will form the left shoulder and the head respectively. We're then going to get a fairly steep pullback followed by a rally. The difference is that this rally will not make a new high above the head. And once that becomes apparent, we can draw a trend line connecting the base of the left shoulder to the base of the right shoulder, and this trend line is known as the neckline. The green light to trade the head and shoulders pattern occurs once you get a break and close on a candlestick chart or a price bar chart below the neckline. Now I'm going to give you another entry option. Another entry option would be to wait for a break below the base of the right shoulder. This would be a more conservative entry point. So depending on whether you're the kind of trader that wants to be the first person on the scene of the party, or if you want to arrive fashionably late, there are a couple of entry options for you. The stop loss is very straightforward. You'll place your stop loss above the right shoulder. Finally, the target for a head and shoulders pattern is derived using what's known as a neckline measurement. So the neckline measurement is drawn or is derived by drawing a trend line straight 90 degrees from the top of the head to the neckline and then overlaying that at the point of breakout from the neckline. So that is your target. So that would be all the way down around 470, on this currency pair. So from a position field standpoint, this is what a typical risk-reward ratio might look like for a head and shoulders pattern. Okay, now we're going to take a look at the inverse head and shoulders. So the inverse head and shoulders occurs after we have a steep decline, followed by a bounce, followed by another decline to fresh new lows, followed by another bounce. This time, however, the market can't make a new low and it will break higher. When it looks like it's breaking higher, we can label the inverse head and shoulders pattern. So you can see it's the exact same components as the regular head and shoulders pattern. It's simply flipped. It's a mirror image, but the same parameters would apply. We're looking to enter the market on a break of that neckline trend line. We're going to place our stop below the low of the right shoulder, and we're going to use the same neckline measurement to derive a high probability target. Okay, so that's what the head and shoulders pattern looks like in idealized line diagram format. We're now going to take a look at some real market examples across a variety of different time frames and currency pairs. So here we have a nice head and shoulders pattern in the Hungarian forint. Now this is a very interesting head and shoulders pattern. I remember actually tracking this in 2021. Unfortunately, this isn't a currency pair I trade all that often, as it is quite exotic. But the point here is that these head and shoulders patterns will form on any market. So not just fiat currencies, you'll see these in cryptocurrencies as well. And you'll see these on equities, you'll see it in commodity markets, everywhere, all right? It's a ubiquitous pattern. So what happens here is we get our decline, we get our bounce, we get our head, we get our right shoulder, and then we get our neckline and we break significantly higher to the upside. Okay, so with this pattern, it is fairly easy to identify, okay? But I do want to give you some words of caution, all right? We're going to go back, we're going to go back to our idealized line diagram example for a moment. Is this a head and shoulders pattern? You know, some chartists will say yes. I say no. The reason for that is that we got a new high already, all right? So instead of making a proper right shoulder with a proper neckline, you see now our neckline sloping up, we broke to new highs. To me, this actually invalidates the head and shoulders pattern. It doesn't mean the market's not going to go higher, but to me, this is more of a classic bullish power reversal that we covered very well in our Maverick curriculum versus a proper head and shoulders pattern. All right, and the inverse will apply to the regular head and shoulders pattern as well. Notice here the neckline would be sloping downwards. Okay, I would avoid trading a head and shoulders pattern that looks like this. I would instead use a different trading strategy. Okay, all right, going back to the forint. So we have our left shoulder, our right shoulder, we have the head, and we have the neckline. We would enter the market on a break of the neckline. So once this candle closes, we're on the daily time frame chart here, we would enter like this. We would place our stop loss just below the right shoulder, and we're going to derive our neckline measurement, which is typically my minimum target. So you can see here we get a reasonable risk-reward ratio, almost 1.5 to 1. So whether that risk-reward ratio is acceptable and fits your trading plan or not is entirely up to you. Okay. Now there's of course ways of targeting higher. We can use classic tools within our overall toolbox as technical analysts. We can also look at prior swing highs and lows. So we can look at this swing high up here, you know, and we can extend our target even further if we really wanted to. I'm just saying the neckline measurement is my default minimum accepted target for the head and shoulders. All right, we're going to move on to a head and shoulders pattern in the Aussie dollar. This one's more recent. Okay, so as you can see, we've got an inverse head and shoulders here. We have our left shoulder. We have our head. We have the right shoulder here. And then that blue trend line is our neckline. So we're going to derive our neckline target. We're going to take that same trend line and then lay that right above the breakout point of the head and shoulders pattern. So our trade would look something like this. We place our stop a few pips below that right shoulder, and we're taking our target to that neckline measurement. All right, so in this case, we would have met that minimum target today off the back of today's soft inflationary print. Okay, all right, we're now going to take a look at another head and shoulders pattern. This one's in sterling Kiwi, and this one's a much more, more traditional head and shoulders pattern. It's not the inverted variety. So again, we have our left shoulder. We have our right shoulder. We have our head here, and then that blue trend line is the neckline. So in this case, we would take our neckline measurement like this, overlay that from the breakout point of the neckline. Our trade will look something like this. So you can see we're still on our way to that minimum expected target. And of course, I can always extend that target if I wanted to target the lows from September 2022. All right, so I'm just talking again about our minimum expected target. And then the final example, which is also recent, is here in the euro dollar currency pair. So here we have our left shoulder. We have our right shoulder. And here we have the head of the pattern. The blue trend line is the neckline measurement. As always, we're going to derive our neckline measurement for our target. And you can see, oh, we're getting very close to that target today. Okay, so there we go. So that's what trading the head and shoulders pattern looks like. They're quite easily identifiable on a price chart. You're going to start spotting them everywhere. The trick separating good head and shoulders patterns from poor ones is to remember that they form at market tops or bottoms. I'm going to go back to the forint and show you an example of a head and shoulders pattern that looks like a head and shoulders pattern, but did not really appear at a market bottom. So you can see here we have our left shoulder here, we have the head here, and we have the right shoulder here. I would not consider this a head and shoulders pattern, however, because it did not take shape at a market bottom, unlike this one here. So when I see a head and shoulders pattern like the one that we just looked at right now, I would come up with a different way of trading that. I wouldn't trade this as a head and shoulders pattern just because it didn't appear at a market bottom. Okay, so there are other strategies that we can use. We've covered trading the zigzag. Well, if I zoom in here, there is a fairly clear zigzag on the 15-minute time frame that we could have traded. So here's the zigzag. I'm going to label the zigzag using A, B, and C. And just remember, our entry guidance for zigzags, or one of them anyway, is a break above that wave B high. So in this case, we don't have to use the head and shoulders guidance to trade this pattern. The zigzag would have worked very well and gotten us into the trade even sooner, and we could have derived an excellent target off of this zigzag as well. All right, so how would we derive targets? Well, you can employ trailing stop loss. I like to look at Fibonacci extensions, which we cover as well in the Maverick curriculum. So I like to look at 161.8% extension. So that gives us a risk-reward ratio on this particular trade of roughly 2.5 to 1. Okay, all right, so that's it for me, guys. Fairly simple lesson today on identifying the head and shoulders pattern and trading the head and shoulders pattern. I hope this video is helpful as always. And if you think you've spotted a head and shoulders pattern on your price charts, but want to make sure you spotted it correctly, feel free to send it to me and I can take a quick look for you. All right, thank you, Maverick traders. I'll talk to you soon.